I still love, I still, I still love, stay I still I
I bet today is the 23rd of April, being a Thursday, and in relation to the economic calendar, we had no high impact news, and simply just going to be taking a look at the trade I took during the AM session, about 15 minutes before the New York lunch session. So, as per usual, just going to jump into the higher time frames, get a grasp for what is going on entirely. So taking a look at the daily time frame, not much has changed since the last video I had uploaded, which would be the Tuesday analysis. So we have the Wednesday's trading, and we see Wednesday delivering up towards buy side and engaging with that 27,000 level, that institutional round figure level. And from that engagement, we had the Wednesday candle open and immediately deliver up towards buy side, and it's left a devil's mark. My eyes are automatically drawn to this in terms of it serving as a draw on liquidity. So would be looking for a means for us to trade towards that draw on liquidity, as well as the fact that we also have the 0.2, 0.3% of that TGIF, which can also serve as a draw on liquidity. As I mentioned in the last analysis, just because this was from the previous week's trading, we ended up seeing Friday failing to deliver that TGIF. So this TGIF, that 0.2, 0.3 of the previous week's range, still holds a level of importance later on in time. But overall, that is it for the daily time frame. The only other thing that I was paying attention to would have been the 27,250 level. But yeah, that is really just about it for the daily time frame. Dropping down into the hour 4, there wasn't really anything I was paying attention to on the hour 4, to be quite honest. The only thing I was observant of was the fact that, okay, price action has been spending a lot of time around this imbalance right here. And even so, we're still spending time inside of it. Going on a tangent, this 10 a.m. candle is a whipsaw candle. This is not ideal for tomorrow's price action. There's about an hour and 30 minutes left in this day. So unless we end up breaching either side of this, or unless we end up having a new day opening gap open outside of this range, it could serve problematic, but that isn't the premise of the video. But in relation to the hour 4 chart, there wasn't anything that I was paying attention to other than this imbalance. I was just taking the observation to the fact that, okay, price action is spending a lot of time inside of this imbalance right now. Taking a look at the hour 1, it's a little bit more descriptive, but to be quite honest, M15 and M5 were where a lot of the ideas had stemmed from, because going into this week, I was under the inclination that this was going to be a consolidation week. And today being Thursday, looking at what we have done, that still has potential for this week to be a consolidation week. We have the week opening right here. We don't have a sufficient low. 1800 opens, immediate buy side delivery. We have engagement with the rejection block, but we don't have a low under that 1800 candle. And as of right now, we were delivering towards that weekly opening. So the week hasn't done absolutely anything. But in relation to the hour 1, so we have the 1800 opening being right here. And what we instantly take notice to is the fact that Asia has an expansion. This is something that you just do not like to see. Asia expanding, it's going to cause problems for the London session as well as the New York AM session. Asia has this large deliverance down towards sell side, and the problem is it doesn't do anything of pure significance. The only thing it does do is engage with this imbalance right here, and this imbalance engaged with the previous day high. So when we take a look at the left side of the curve, we have this high that resides here, and this would be the high of Tuesday's candles. So we end up seeing this 10 a.m. candle during Wednesday's trading displacing through the Tuesday high of day, and the fashion it's done in, it's with the formation of an imbalance. So the return back down into this imbalance, you'd be looking for it to be utilized as support, and that is what ends up occurring here. So Asia delivers down into that imbalance, we snap right back out of it, And over the course of Asia, we come back again, engaging with this imbalance. But what we take a notice to is that we end up closing below the consequent encroachment. You generally don't like to see this in terms of when you're looking to gauge order flow. If we're looking for bearish order flow, we don't look to close above the consequent encroachment of bearish PD arrays or the mean threshold of bearish PD arrays. We do see the lower quadrant being respected in relation to this imbalance right here. And then this hour one imbalance is utilized again during the London session for this buy side delivery motion to end up engaging with the previous day high of Wednesday. Now, with London utilizing this imbalance again for this buy side delivery motion, a cracking correlation ends up presenting itself here. So with YM engages with this low, and we see NASDAQ failing to follow suit. And I have a standard deviation anchored to this leg right here, but not the entire leg. So it's a body standard deviation. We're simply only anchoring it to the down close candle right here. Reason why being is, like I'd mentioned in previous analysis videos, you're looking for a series of down close candles. So if we are looking for a point of inception to occur at sell side for that buy side delivery motion to unravel out a market maker model, you'd preferably like to see a series of down close candles engage with sell side, and then a series of up close candles close above these series of down close candles for your change in stay in delivery, for us to then utilize it and then continue that buy side delivery motion. But in this scenario here, we don't have a series of down close candles. This 5 a.m. candle ends up ruining that sequence. What ends up occurring is we still have the signatures unraveling themselves out. So we still have the formation of an order block right here. And we can take a notice to the fact that how price action is utilizing it. The bodies are being very respective of it. We're not having any closure inside of it. The wicks are simply just doing the damage. And this invites that buy side delivery motion to engage with the previous day high being the high of Wednesday's trading. So dropping down into the 15, the acknowledgement that, okay, we haven't done anything this week. We haven't done anything of significance. The only thing of significance that we've done over the course of this week is, for one, we have the cracking correlation as present with the previous week high with ES. And then for two, we've just engaged with a round figure level being that 27,000 level. But other than that, we haven't gone anywhere. We're still currently drawing down towards the weekly opening. And this would ultimately result with the weekly candle closing indecisive. So this is what our weekly candle looks like right now. If we are to continue delivering down towards sell side towards our week opening, unless we completely flip the candle altogether, the week is going to close indecisive. And indecisive candles, they don't know where they want to go. We're delivering both sides of the range. But taking a look at the 15-minute, what we've done over the course of the week is simply just been engineering both sides of the market. So taking a look at Monday, we have the engineering of all of this sell side right here. And with the deliverance to engage with all of this sell side, we further then engineer more buy side as well. After we engage with all of this buy side, we further engineer more sell side right here. Now, the sell side from Wednesday was left intact because we had that deliverance up towards buy side, engaging with that 27,000 level. And then we end up having the Asia session for today, delivering down towards sell side, not doing anything of significance other than engaging with this hour one BISI that resides here, as well as the M15 BISI that resides right here, as well as engaging with the previous week high as well. But an important thing to take a notice to is the fact that it's not engaging with any form of sell side that resides right here. So we're simply just engineering more sell side once again. And then as the London session is about to end, that cracking correlation presents itself. And with this cracking correlation, when we were observing it on the hour one, we had to utilize a body standard deviation. So we had to anchor the standard deviation onto this singular down close candle. When we pay attention to the M15, we don't have a valid change in stay in delivery in any form. So we don't have the inversion of this imbalance straight away. It's first utilized as resistance. And then we also don't have a formation of an order block. So the formation of an order block, we'd have to close above the series of down close candles, but we don't end up seeing that. So the standard deviation that is derived here would be from the low risk buy, and it's essentially the exact same thing that we see here on the daily chart. We don't have a series of up close candles closing above these series of down close candles. But if this is well and truly going to serve as a point of inception, for us to project this move out in price, we can utilize the low risk buy, as the low risk buy offers a standard deviation. So from this low all the way up to this high, and that's where we end up seeing that -4, -4.5, which was utilized for today's trading. So the same scenario right here, the low risk buy is being utilized for a standard deviation to project out in price. And we end up seeing that -2, -2.5. And right here, we have the reaccumulation of orders. And this is where it invites for very poor conditions for the AM session, because I actually even forgot to touch on this. But if I actually just drop down into a completely naked chart, very poor conditions for the AM session overall. And it's because we're inside of this expansion range that occurred during the Asia session. So price action was still located inside of this range during the New York AM session, and it's just inviting for very, very poor conditions. This was a low resistance move down towards sell side. It was very expansive and very fast, inviting for these high resistance conditions on the right side of the curve, because as we know, where low resistance prints, high resistance will print, and where high resistance prints, low resistance will print. It's exactly what we see here. Over the course, pre-New York AM, we see high resistance price action, TLP residing all under here. This is all high resistance price action. It then invites for a low resistance move to deliver over that high resistance price action. But in relation to the range that price action was located in during the AM session, what we take a notice to is where the lows are being printed as. So this low, this low, this low, this low. Paying attention to just these lows, where they're being engineered at would be under the equilibrium of this respective range. And these would be sell side liquidities in a discount of a range. And these can serve as targeting purposes for when you're looking to engage outside of this range to target the opposite end of the range. So these would all be deemed internal range liquidity, while this would be your external range liquidity. So this is ultimately where I look to collapse my trade, being right here. But of course, there were sites for a lot further, because when we look on the left side of the chart, we also see a TLP that resides right here as well, which price action ended up coming down and clearing in that nice, smooth, low resistance manner. So on the M15, after engaging with that -2, -2.5 cracking correlation present with the Asia high, ES engaged with Asia high, we then have the reaccumulation of orders to continue redistributing back up towards buy side to engage with our point of terminus. And this would have been where our point of inception served for this sell side delivery motion during the AM and after the lunch session. And once again, the exact same scenario is occurring here in terms of, okay, we have a point of inception that is established here. We know that, okay, when we have a point of inception, we're looking for a cracking correlation, we're looking for a change in stay in delivery, as well as a standard deviation that we are able to anchor and project out in price to see where price is willing to deliver towards. But what we take a notice to is that here at this point of inception, there's no valid change in stay in delivery that we can utilize, because we'd look for a series of down close candles to close below these series of up close candles, but we don't have that. Price action ends up slipping into a phase of consolidation, and this is during our New York lunch session, so this isn't anything new or random. But what ends up happening is that during the lunch session, it ends up presenting us a low risk buy standard deviation again. So the exact same scenario here, the same way it's the exact same scenario that occurred here on the daily. If there's no standard deviation that we can look to anchor on at a point of inception, we're going to then look to utilize the next stage of the market maker model, being that low risk buy or sell. In this case being a low risk sell. I'm not sure if I said buy, but in this case being the low risk sell, anchoring that standard deviation, we have the -2, -2.5 utilized for a reaccumulation of orders to continue redistributing down towards sell side, and then your -4, -4.5 ultimately where we deem terminus and price action stops and shifts into a new market maker model. And then taking a look at the M5. Now, I don't even think any of my analysis videos have ever touched on the M5, but it's because today this entire trade was basically derived off of the M5 fractal. In this segment of price action right here, what is occurring is we end up engaging with this candle's high during this candle's trading, and then we end up having the formation of an order block. So a point of inception has established before the key time windows that we're looking for it to establish at. And once again, like I've mentioned, if this occurs, it ultimately means that the 30-minute window that we're looking at is going to be utilized for expansion, which is what ends up happening here. So we end up seeing 11:45 is then utilized for this expansive move down towards sell side. But the only problem is that if we're being conscious of time, we're rolling into the lunch session, which is then utilized for consolidation. And it's not primed in this segment of price action to continue expansion. So what is going to end up occurring here is a retracement back into the range. So we end up retracing back into the range that had already delivered above equilibrium, as well as engaging with this M15 imbalance right here, which offered that low risk sell standard deviation. But we have that retracement back above the equilibrium. And right when the lunch session has finished, 1300, we end up seeing that deliverance down towards sell side to engage with all of this TLP that resides here, as well as the external TLP that we see on the higher time frames as well. But before I move on, when we have this retracement back up into this range, we end up engaging with our -2, -2.5. And as we know, there's only one of two things -2, -2.5 is used for: the reaccumulation and redistribution of orders, or a smart money reversal. In this case, we're not looking for a smart money reversal, so we're not looking for price to completely reverse all the way back up in this range. So we're looking for the reaccumulation of orders to then continue redistributing down towards sell side. But it's important to acknowledge the time this is occurring at. We already have principles, or we already have rule of thumbs, I should say. We already have rule of thumbs in terms of certain sessions, certain windows that are utilized for certain things within price. Lunch being utilized for consolidation, Asia being utilized for what? I don't know, it's none of my business. I was just taking acknowledgement to this candle right here, but then I realized it's 1550, and that is very common to see. 1550 is probably like the most algorithmic time, going on a tangent here, but 1550 is probably the most algorithmic time that I've come to notice, in terms of it's always going to give you an algo spike candle. So drop down into the M1, you're just going to see a candle like this. But going back to what I was saying, right here, it's just the alignment of time and price. We have an element of price here. So the standard deviation is an element of price because we're anchoring it to price. And when the time is right, we engage with the -2, -2.5 for that reaccumulation of orders. And then when the time is right again, after the lunch session has elapsed, we end up seeing that expansion that we were looking to see. And then we have the -4, -4.5 in direct alignment with that TLP. And this is very nice to see. When you have an idea in mind, you already have a drawn liquidity established. Point of inception presents itself. Standard deviation is anchored and projected out in price, and it aligns with the drawn liquidity you have in mind. It simply just adds a lot more conviction into the idea that you were framing out initially. But we have 1300 opening right here, and then we see that very aggressive and fast deliverance down towards sell side. Reason why being is because this is high resistance. We know where high resistance prints, low resistance will print right over, and that's what we see here during that deliverance down towards sell side. Very low resistance price action. It's eager to get somewhere. We're seeing signatures like devil's marks presenting themselves during this move down towards sell side. And then finally jumping in and actually taking a look at the trade. Now, honestly, I don't know, I might do it a little bit different. This video is definitely going to be rather lengthy, but I might do it a little bit different. We have, since I executed on the MNQ contract, there's no annotations here because I'm always annotating on the NQ contract. Okay, so I'm just going to navigate this a little bit different compared to the way we do it, because there's not much annotations here, but there is a lot of insight that's going on here in terms of how one can look to navigate such price action right here, because it's very poor price action. But jumping in, if we take a look at the M1, so starting at the 930 opening. So we have 930 opening being right here, and from the 930 opening, it automatically presents a Kraken correlation right here. So we have a Kraken correlation that presents itself, and with this Kraken correlation, we end up having a series of down close candles, series of up close candles. But this candle in here being an indecisive candle, we're not going to pay any attention to it. So we're simply just going to ignore it, and we can still deem this a change in stay in delivery. And then we can also look to anchor our standard deviation. So from this candle's low all the way up to its high, projecting for that buy side delivery. And we end up seeing that -2, -2.5 being where we have that smart money reversal. But we also know this is in alignment with the hour 1, -2, -2.5, and the M5, -4, -4.5 as well. But 930 opens here, and we have the Kraken correlation, we have the change in state, we utilize it in a rather nice manner, and then we have that deliverance up towards buy side. But what is to be taken acknowledgement with this deliverance up towards buy side is it's very high resistance. We're not delivering towards buy side in a very willing manner. We're not seeing the formation of imbalances, and this is also very important because it's just after 930, and after the 930 opening bell, we're always looking to see when and where our first presented fair value gap is going to print. If it takes rather a long time for a first presented fair value gap to print, it ultimately means that either price is consolidating and not doing anything, so it'd be doing something like this, or simply delivering in a very high resistance manner, a lot of wicks. And more wicks than bodies is never a good sign. So we end up having our first presented fair value gap printing itself right here. So 9:47 is when the first presented fair value gap prints, and that is roughly 15 minutes right after the 9:30 opening. And that's not a good sign. In terms of gauging order flow and understanding what price is doing overall, that's not a good sign. It's taken a long time for an imbalance to print after a 9:30 opening bell. But besides that, after the first presented prints, we end up having the inversion of it. We utilize it as resistance to then see that sell side delivery motion. The only problem that comes in here is that then we end up having 10 a.m. opening right here. A lot of problems have occurred right here. For one, we have the cluster of key time openings. As we know, when there's a cluster of key time openings, it's inviting for very poor conditions like this right here, a consolidation. And we end up seeing 9:30 and 10 opening on top of each other. But an important thing is that the gap between 9:30 and 10 is deemed your opening range. So during that time gap of 30 minutes between 9:30 and 10, a range is being established, and you'd want to take a note of, okay, what does this range look like? It would be from this candle's low all the way up to this candle's high. So from 9:30 all the way up until 10, that is the range that had been established. So we see the 10 a.m. candle opening right here. We do not see engagement with the range low. Neither do any of the correlated assets have engagement with their respective opening range low. And we end up seeing consolidation occurring around the cluster of our key time openings. We have further, again, the engineering of sell side. So we're taking a notice to the fact of how sell side is printing. We're simply just engineering sell side. And when we are doing this is right after a 10 a.m. opening, and 10 a.m. would be our hour 4 candle. We're looking to frame the power of 3 for a 10 a.m. candle. So we don't have a sufficient low for a 10 a.m. candle. This is not a sufficient low. There's no cracking correlation that presented itself here, no second stage. None of the other correlated assets have engaged with it, and we've simply just been engineering a lot of sell side. We're grinding towards buy side, and we're still stuck inside this opening range high. We have the inversion of our first presented fair value gap again for the AM session, utilize it as support, and then we come engage with the range high for that opening range. And then we see a consolidation of orders occurring around right here. Now, simply just briefly going back to this segment of price action, during this consolidation of orders, we do have a cracking correlation that presents itself. So we do have the engagement with sell side. Cracking correlation was present, and then it invites for that buy side delivery motion. So in terms of how we can look to gauge order flow and look to avoid these type of conditions altogether, would be, okay, we have 9:30 open, deliver, engage with this pool of sell side right here. Cracking correlation present, we have a change in sustained delivery. For one, we have this indecisive candle that prints right here. We can ignore this candle, but it's not clean. Algorithmic price action is clean. You'd like to see a series of down close candles, series of up close candles in a very clean manner. But we end up having the utilization of it in a very nice manner. We don't see any closure inside of it. The next problem that occurs is we haven't printed a fair value gap. No imbalance is printed since the 9:30 opening. When are we going to print this imbalance, and where are we going to print this imbalance? Where we end up printing it would be after we engage and breach this pre-New York AM high. So we end up breaching this pool of sell side, and we form our first presented fair value gap with it right there. Now, in theory, you're going to look to say, we utilize this imbalance as support to continue this buy side delivery motion. And if it's not utilized as support, it will ultimately be then utilized as resistance, which is what we end up seeing here. So we end up having the inversion of it. We utilize it as resistance right here, and then we have that deliverance down towards sell side. But during this deliverance down towards sell side, we then become conscious of time in terms of, okay, 10 a.m. is opening rather soon. Where are we in relation to the opening range? 9:30 is opened here. We created the range low, and we have a range high right here, and then 10 opens here. We've opened inside of the range, and 10 opens in a fashion that's rather aggressive. It aggressively delivers down towards sell side and simply just teases the range low, engineers sell side back under it, and then very high resistance price action. If I was looking to engage with this price action here to look for longs, I'd simply be waiting for this range low to be engaged with, but we don't end up seeing that. So we simply continue that deliverance all the way up towards buy side, engaging with that -2, -2.5, which is in alignment to our other standard deviations. And then we end up having a point of inception occurring right here. So before our point of inception was established, we also take notice to the fact that we were also creating a TLP that resides right here. So sell side was simply just being engineered, as buy side was continuously being engaged with. And then we end up having a clean change in stain delivery that occurs right here. So we have a series of up close candles, series of down close candles, change in stain delivery. But with this change in stain delivery, we also have the formation of this imbalance that resides right here. We see as price action is engaging with the change in stain delivery, we see engagement with the M1 SIBI that resides right here. Very clean engagement with it. We have no closure inside of it. And then we end up forming an order block right off of it right here. And this is where I ended up executing the trades. So the moment we ended up breaching this candle's open, I ended up market executing because I'd already taken acknowledgement of the fact that we had come and engaged with this imbalance right here as well as this imbalance right here. And not only were we just engaging with these M1 PD arrays, but we were also engaging with the M5 PD array, being the M5 order block that resides right here. So then we have that formation of the order block, and then you also have the standard deviation, like, so this would be the entire M5. And then with that standard deviation, we see that -2, -2.5 reaccumulation of orders to continue redistributing down towards sell side. Kraken correlation ended up presenting itself right here just before the lunch session ended, and you could also grab yourself a standard deviation right here, and you could further grab yourself the low risk by standard deviation. And we also see that the low risk by standard deviation is in alignment with the M5 standard deviation that we have projected out in price right here, which aligns for that TLP. So yeah, that is basically it for the entire trade.